Want to cut the cost of your existing mortgage? Or maybe you're trying to get a good deal on your first home. Whether you're a first-time buyer or homeowner, a lower interest rate will make your monthly repayments cheaper. But how do you get a lower rate? We'll run you through the top 6 ways. Mortgage lenders look at your credit score to determine how trustworthy you are as a borrower to decide how much to lend you and what interest rate to offer. If your credit rating is stopping you from accessing the best rates, the good news is it is possible to improve your score over time. The first step is to check your credit score, so if you can identify any issues that need addressing. It's worth checking your score across the 3 main credit referencing agencies used and trusted by lenders: Experian, Equifax and TransUnion. A helpful service called Check My File collects your credit reports from all 3 to give you a full overview. We've left a link to Check My File in the description below. Watch our videos on credit scores for more tips on how to improve yours. The bigger your house deposit, the better your chances of securing a lower mortgage rate. This is because lenders tend to reserve the best rates for those of a smaller loan to value. If you're struggling to save up for a house fund, there are ways to get a mortgage with a low deposit. Check out our video on low deposit mortgages to find out more. Walking into your high street bank and asking for a mortgage might seem like the easiest way to get a home loan, but it can actually be quite costly. When you approach a specific lender for a loan, you miss out on hundreds of other deals elsewhere. By using a specialist mortgage broker like Tembo, you'll have access to a much wider choice of mortgages. We have access to over 100 lenders and over 20,000 mortgage products. You'll also have an expert on your side to do the research for you, so they can find you the best deal possible from across the market. Interest rates can vary depending on whether you opt for a fixed, variable or tracker mortgage, so be sure to consider each option before making a decision. Fixed rate mortgages tend to be a more popular option for those looking for certainty and stability, as your mortgage payments will be the same each month. However, fixed rate mortgages can offer higher interest rates than variable or tracker deals. If you are comfortable with your mortgage repayments changing month to month, it's worth considering a variable or tracker rate if it allows you to get a lower interest rate. Adding another person to your mortgage application could help you access lower interest rates. This is because the more people responsible for the debt, the less risky lenders usually consider the loan. Whether you're buying a loan or with a partner, consider adding a loved one or friend to your application as a guarantor. For example, for an income boost. Your guarantor's income will be added to yours so you can increase your borrowing potential and potentially lower your mortgage rate too. As a guarantor, they won't be classed as an owner of the property and don't have to live with you. There are other ways that loved ones can support your home purchase or remortgage. We've covered these in our guarantor videos. If you're a homeowner already, you don't have to keep paying the same interest rate forever. By remortgaging onto a new deal, you may be able to reduce the amount of interest you pay and save thousands of pounds over the course of your mortgage. When you create a free Tembo plan with us, we'll show you the best way to remortgage, including whether it's best to stay with your current lender or to make the switch. Whether you're looking to remortgage or get your first home, see how much you can afford with Tembo. By creating a free plan with us, you'll get a personalised recommendation of all the ways you can buy a home, plus live interest rates and indicative monthly repayments. Let's make home happen.